If you're a senior who owns your home, sit down, because what I'm about to tell you might make you angry. Right now in Canada, there are seniors who rent their apartments who are getting bigger government checks every single month than seniors who own their homes outright. That's not a mistake. That's not unfair. It's actually built into the system on purpose. And if you don't understand why, you could be leaving hundreds, even thousands of dollars on the table every year. Stick with me for the next 15 minutes because by the end of this video, I'm going to show you exactly which programs favor renters, why they were designed that way, and this is the important part, how homeowners can still get access to almost the same benefits if you know which forms to file. There's one program near the end of this video that most homeowners have never even heard of, and it could put real money back in your pocket this year, so don't skip ahead. Let's start with point number 1, the Ontario Energy and Property Tax Credit, often called the OEPTC, which flows through the Ontario Trillium Benefit. What is it? This is a credit for Ontario residents to help offset the cost of property tax in the energy portion of your rent or your home. It's meant to recognize that whether you rent or own, you're still paying into property tax, either directly if you own, or indirectly baked into your rent if you're a tenant. What is it worth? Here's where it gets interesting. Seniors, that's anyone 65 and older, qualify for a higher maximum credit amount than younger applicants. And renters often see a bigger relative benefit because a portion of every rent payment is treated as if it includes property tax, even if your landlord never itemizes it that way. Depending on your income and your rent amount, this can add up to several $100s a year paid out monthly directly into your bank account. Homeowners get a similar credit, but the calculation is based on the actual property tax you paid, which, if your home is fully paid off and assessed at a lower value, can sometimes work out to less than what a renter in a pricier building receives. How do they get it? You apply through your annual income tax return. You'll need to complete the ON-BEN application form, which is filed alongside your T1 return. Renters need their landlord's name and the total rent paid for the year (DAWISI). Ask your landlord for a rent receipt in December if you don't already get one automatically. Homeowners need your property tax bill. File this every single year, even if your income is low and you don't think you owe tax, because this credit is fully refundable. Now, I know what some of you are thinking. If I'm a homeowner, why would I get less than a renter? That doesn't seem fair. I paid off my mortgage for 30 years. I hear you, and it's a fair question. But remember, this program isn't measuring how much you've sacrificed over your lifetime. It's measuring your current housing cost burden relative to your current income. Government programs like this are designed around cash flow today, not equity you've built up. Your paid-off house is actually an asset working in your favor in other ways, which I'll get to in point 3. So don't panic. Stick with me. Point number 2, and this one is huge if you live in British Columbia, SAFER, which stands for Shelter Aid for Elderly Renters. What is it? SAFER is a provincial program specifically for low-income seniors 60 and older who rent their home. It pays a monthly cash supplement directly toward your rent. There is no equivalent program for homeowners in BC. This benefit exists exclusively for renters, full stop. What is it worth? The exact amount depends on your income and how much rent you pay compared to the average rent in your area, but many recipients receive a meaningful monthly top-up that can cover a significant chunk of their rent increase year over year. For some seniors, this is the difference between staying in their community and being forced to move. How do they get it? You apply directly through BC Housing, not through your tax return. Search BC Housing Safer application or call BC Housing directly. You'll need proof of your rent, your income, and your age. This one is worth applying for, even if you think your income is too high. And the thresholds are higher than most people assume, and it costs you nothing to apply and find out. Similar rent-specific supplements exist in other provinces under different names. Manitoba has Rent Assist, which also pays higher amounts to seniors and people with disabilities. If you're a homeowner, these specific programs simply do not apply to you because they're designed to address the fact that rent, unlike a mortgage, never gets paid off. The government recognizes that renters face an open-ended rising cost for life, while homeowners eventually reach a point where their housing cost is just property tax and maintenance. Here's a thought some of you might be having right now. Okay, that makes sense for rent programs, but does this mean I should sell my house and start renting to get more benefits? I want to be very careful here. That is a massive financial decision, and benefits should never be the main reason you decide to sell your home. Selling triggers other costs, and you could actually affect your GIS eligibility depending on how you invest the proceeds. Talk to a financial advisor before making any decision like that. What I'm showing you today is about maximizing what you're already entitled to, not about restructuring your entire life around a tax credit. Point number 3, and this is the payoff I promised you at the start. Homeowners have access to benefits that renters simply cannot get. And once you add these up, the playing field evens out fast. What is it? The first is the Home Accessibility Tax Credit, filed using line 31285 on your tax return. This lets you claim renovation expenses that improve accessibility and safety in your home. Think wheelchair ramps, walk-in bathtubs, widened doorways, stair lifts. What is it worth? You can claim eligible expenses up to a set annual maximum, and it's a non-refundable credit calculated at the lowest federal tax rate, meaning even a modest renovation can translate into hundreds of dollars back at tax time. Renters cannot claim this credit for landlord-owned property because you don't own the structure you're modifying. How do they get it? Keep every single receipt for accessibility-related renovations, contractor invoices, permits, material costs. Claim them on line 31285 when you file. If you're not sure whether a renovation qualifies, CRA's general rule is, does it help a senior or a person with a disability access their home more safely? If yes, keep the receipt and ask your tax preparer. The second homeowner-only advantage is property tax deferral programs offered by most provinces. This lets eligible seniors defer paying their annual property tax until the home is sold, essentially turning your home equity into an interest-free or very low-interest loan from the government. This isn't free money like a benefit, but it dramatically improves monthly cash flow, which is the entire point of everything we've talked about today. Let's address the trust question directly because I know it's on your mind. Does claiming any of these credits affect your GIS or your OAS? The Home Accessibility Tax Credit and the OEPTC are both structured so that claiming them does not reduce your GIS or your OAS payments. They are separate systems. GIS looks at your net income from line 23,600 on your tax return, and most refundable credits and deductions we've discussed today either reduce that number or sit outside of it entirely. They don't count against you. But, and this matters, if you're not sure how a specific renovation deduction or provincial deferral interacts with your specific income situation, this is exactly the kind of question worth a 15-minute call with a tax professional or a free consultation through your local Seniors Resource Center. It costs you nothing to ask, and it protects you from any surprises. Point number 4, and this is the bonus I teased at the start of the video. Pension income splitting using Form T-1032. What is it? If you're married or common law and one spouse has significantly higher pension income than the other, you can elect to split up to 50% of eligible pension income between you on your tax returns. What is it worth? This can lower your combined household tax bill significantly, and this is the part that connects everything back to today's topic. It can also help protect a lower income spouse's GIS eligibility or increase it, because splitting income can shift you into a lower bracket for OAS clawback purposes too. This applies to both homeowners and renters equally, but it's a step almost nobody takes because their tax software doesn't prompt them clearly enough. How do they get it? File Form T-1032 jointly with your tax return every year. You have to elect it annually. It doesn't carry over automatically. If you use a tax preparer, ask them directly, are you applying pension income splitting for us this year? If they say no or seem unsure, that's a red flag. So here's where we land. Renters get bigger, direct cash benefits like safer and larger relative property tax credits because rent never disappears. Homeowners get powerful one-time and ongoing tax tools like the Home Accessibility Tax Credit and Property Tax Deferral because your home is a growing asset, not a rising cost. Neither group is being shortchanged. The system is just built around two very different financial realities. Your action step this week: pull out your most recent tax return, find line 23,600 and line 31,285, and check whether you've been claiming everything you're entitled to. If you're a renter, get your rent receipt sorted and look into Safer or your provincial equivalent today. If you're a homeowner, gather your renovation receipts and ask about property tax deferral in your municipality. If this video helped you understand where your money is going and where it should be coming from, do me a favor. Share it with a neighbor, a sibling, or a friend at your community center who might be missing out on one of these programs. Drop a comment below and tell me, are you a renter or a homeowner, and did anything in this video surprise you? I read every single comment and it helps me know what to cover next. And if you want to stay ahead of every benefit update, every new form, and every deadline that CRA and Service Canada don't exactly advertise, hit subscribe and turn on notifications. I'll see you in the next video.